Texas Personal Lines Agent Exam. Welcome to the quiz. What is a loss assessment coverage in a homeowner's policy, often associated with HO6? Is it A, coverage for your share of a loss assessed by a condo or homeowners association? Or B, coverage for assessing the value of your loss? C, coverage for damage assessed to your vehicle? Or D, the insurer's assessment of your claim? The answer is A. Loss assessment coverage, often included in or added to HO6 condo policies, or as an endorsement on other forms, pays your share of a special assessment levied by a condominium association, homeowners association, or co-op board for a covered loss to common areas, e.g., roof damage from storm, lobby fire. If the association's master policy limit is exhausted or has a high deductible, the board can assess unit owners to cover the shortfall. This coverage protects you from large, unexpected bills, often capped at $1,000 to $50,000 or more. It is especially important in condos where you own only the interior but are responsible for shared structure costs. Option B is wrong because it is not about valuing your own loss. Option C is unrelated to vehicles. Option D is insurer claim review, not assessment coverage. Next question. Which homeowner's policy endorsement provides coverage for business property used on the premises? Is it A, scheduled personal property endorsement? Or B, water backup and sump overflow endorsement? C, business pursuits endorsement? Or D, incidental business property endorsement? The answer is D. The incidental business property endorsement, or similar home business endorsement, provides limited coverage for business personal property, computers, office furniture, inventory, used in a small home-based business conducted on the premises. Standard homeowners policies exclude or severely limit business property and activities, often $2,500 to $5,000 max for business property, no business income. This endorsement increases those limits and may cover business liability exposures. Option A is for high-value personal items. Option B is for sewer/water backup. Option C is for business activities away from home, e.g., real estate agent. Next question. What is the purpose of an accidental death and dismemberment, AD&D, rider on a life or health policy? Is it A, to pay a benefit if death occurs from natural causes? Or B, to pay a specified benefit if death results from an accident or for the loss of limbs or sight? C, to cover medical expenses from an illness? Or D, to provide a retirement income? The answer is B. An AD&D rider pays an additional benefit, often equal to or double the base policy face amount, if the insured dies from a covered accident or suffers accidental loss of limbs, sight, speech, or hearing, dismemberment. It is designed for sudden, violent, unexpected accidents, car crash, fall, drowning, and provides extra financial protection for catastrophic events. It does not cover death from illness, suicide, or natural causes. Option A is base life benefit. Option C, medical expenses separate. Option D, retirement is annuity or whole life cash value. Next question. In property insurance, what does ordinance or law coverage protect against? Is it A, the cost of fines for breaking the law? Or B, increased costs to rebuild or repair due to updated building codes? C, the cost of legal defense in a liability suit? Or D, damage caused by government action? The answer is B. Ordinance or law coverage, often an endorsement or included in some policies, pays for increased costs to repair or rebuild a damaged structure to comply with current building codes, zoning laws, or ordinances that were enacted after the original construction, e.g., adding sprinklers, ramps, stronger materials after a fire. Without it, the policy only pays to rebuild to the original standard, leaving the insured to pay the extra cost for code upgrades, which can be tens or hundreds of thousands of dollars. Option A, fines not covered. Option C, legal defense is liability. Option D, government action, condemnation, usually excluded. Next question. For an HO4 renter's policy, what is typically covered under coverage A? Is it A, the tenant's personal property, or B, the physical structure of the apartment building, C, the tenant's liability, or D, the landlord's furniture? The answer is A. In an HO for renters policy, coverage A is typically the personal property coverage, often relabeled as coverage C in standard forms, which covers the tenant's personal belongings, furniture, clothing, electronics, against named perils like fire, theft, windstorm. The building structure is the landlord's responsibility and covered under the landlord's policy. Option B is landlord coverage. Option C is coverage E, liability. Option D, landlord property. Next question. What is the key feature of non-renewal versus cancellation of a policy? Is it A, non-renewal occurs at the end of a policy period, cancellation occurs during the policy term? Or B, they're the same thing? C, cancellation only happens for non-payment? Or D, non-renewal is always initiated by the insured? The answer is A. Non-renewal means the insurer chooses not to offer another term when the current policy expires, end of term, usually with advance notice, 30 to 60 days. Cancellation means the insurer terminates the policy midterm, during the policy period, often for non-payment, fraud, or material misrepresentation, and may require shorter notice for non-payment or longer for other reasons. Non-renewal is less severe and does not imply wrongdoing. Option B, wrong. Option C, partial. Cancellation can be for many reasons. Option D, wrong. Non-renewal usually insurer-initiated. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.